So I've just entered on this trade here on Dowjones. I've gone long. As you can see, we have a really nice clean level long here, and you know what I'm expecting is we have higher highs, higher lows, and you know we're right at the higher low area, a support level where I'm expecting price to bounce off from in anticipation for price to go on and head even further, give us some higher highs up around here somewhere. And so let me update you accordingly. I'll keep you up posted and let you know how this trade plays out. So another update on this trade. I'm actually thinking of closing off this trade simply because we've closed very weak on the hourly candle. Okay, we can see there's a lot of weakness in this candle, and typically what follows after a candle as weak as this, even though it's got a nice long tail bar, it is off of a support level. I do believe I may be able to get a much more better entry for it to come down, and possibly may even get a much more better entry. So I'm going to close off this trade for, you know, a very small percentage, very small win, and do so accordingly. Reason being is simply, again, because we closed very weak. I'll give you an example of this candle. If you just look at this candle right here, okay, because the hourly candle closed, we did get a really nice rejection off of this level, and I do believe we might get a much more better entry as price comes down. So an example of this candle, very weak candle. It's a long tail bar, but it's still closed fairly weak. And I guess this is one of the things that I teach is being able to read candlesticks. Okay, so let's look at this example here, and see if we can find another similar candle, and we do. We can see one right here. I'll highlight it. Okay, you know, either one of these two candles, okay, whether it be this one or this one. Okay, let me zoom in for you, maybe, perhaps. Okay, and so we had a very weak close on this candle. What followed next is the next candle went up a little bit, and then it continued coming down, right? And then if you look at this candle, it closed very weak, went up, excuse the sirens, it went up. Okay, so we had a similar candle to this candle, pretty much looks similar to what we have had happen here right now. Okay, and then it went up, it closed weak, and so then just like what we expected here, okay, the next candle, as soon as it opened, it went up. Okay, and then it continued coming down, and this is pretty much what I expected, which is the reason why I closed this trade. And as you can see, it's done pretty much that, and we might even get a much more better entry. If I do, I'll update you. If not, then that's really just a little basic on candlesticks. Okay, and you can see, like, you know, it's very important that you are able and you're focusing on learning how to read candlesticks. Okay, understand the strength of particular candlesticks. So we got the rejection we were looking for, but it wasn't, as you know, if it closed up here somewhere, then, or even, you know, if we measure this candle and we say 50% is here and it closed above 50% of the entire candles and this entire hourly session right here, then, you know, perhaps I would have just kept my stop loss there, kept my entry there, and wait for price to retrace and go back up. But considering the fact that it closed very weak, I wasn't happy with it. The following candle, it went up, it created the tail, and I pretty much closed it as you guys just saw. Okay, so I'm going to keep an eye out, see if I can get a much more better entry, because this is a zone that I am looking at. I want to kind of maybe drop down one or two time frames, see if I can get a better entry. If I do, then I'll be sure to record it. If I don't, then what you can take away from this video is that candlesticks, okay, you can see there's no indicators, there's no you know, moving averages, nothing of that type. It's pure price action trading. It's pure candlestick analysis, being able to read candlesticks. Okay, I can't stress the importance of your ability to be able to read candlesticks. All right, so with that being said, that's it from me, and I'll stay tuned. Okay, stay tuned, everybody. All right, bye for now. So so now I have dropped down a time frame or two, and you know, down into the 15-minute to look for that entry. You know, I can take this trade because we will get a slight rejection. The risk to reward will be much more smaller. In fact, I'm just gonna see how this candle, this is a 15-minute candle, we just opened. There is weakness here, so, you know, perhaps maybe just wait a little bit more longer. um, it is a nice level. I would like to take a trade, but if I don't see anything, then I'm not gonna force a trade, you know what I'm saying? So um, let's see how. Okay, so I might just take this right off this level, going once, and this time around I'm gonna risk far less than what I initially risked, which means my risk to reward is looking a lot more tighter. Just along here, okay, and let's see how this plays out. My target, I'll target these highs. Okay, I'm just going to trade it off this time frame here real quick. There we go. Okay, and let's see how this plays out real quick. I'll just keep this rolling just to keep you guys informed, I guess. And as soon as we move up halfway or up, a 1-to-1, I'm going to break even, so I'm going to minimize risk. But let's see how this candlestick close out, and you can see, my risk to reward has adjusted according to the time frame that I'm on. Okay, whereas on the hourly I was expecting a much more bigger push up, but it didn't happen. We closed again pretty weak, and now it's going to be relative to the time frame that you're on. I may have just kind of forced myself into this trade just to really give you an example, but I'm still pretty confident about it. And I really want you to take something from this, which is again the importance of candlesticks. And now you can see I already anticipated rejection. Why is it that I'm expecting rejection right off of this level that I've just entered this trade? Again, that's something else that I cover throughout my sessions and some of my lessons. Okay, so as soon as we are up by 1-to-1, I am going to consider breaking even to completely take off any risk in the market, and that way we have a risk-free trade. Okay, so I guess I'll just kind of commentate over this trade as it unfolds. See, one of three things is going to happen. It's going to head on upwards. Very unlikely, simply because of the fact that we again have very weak candles. It's either going to stop me out for a small loss, not even 1%, which is cool. And another reason why I've kind of risked far little is because of the weakness, and the reason why I entered the trade is because I really love to show you guys an example of what I mean here. And then the third thing is that it'll stop me out at break even. Okay, so we can jump up on a time frame and see how we are kind of forming. This is a 15-minute candle. The last 15-minute candle is very weak, so it's really not the best of trades. Okay, but I'm happy to put my risk in the market for a really good risk to reward, as it looks like there's some room there for us to bank real quick on. So let's see. Alright, we're in the 5-minute. Got a minute till the next candle opens. So really what I'm looking at is I'm saying to myself, well, how is this candle going to close? Okay, how is this current candle going to close considering where we are? Okay, if it closes indecisive, that's a good sign. I can actually minimize risk if it does close indecisive, because following an indecisive candle, you should, what I would anticipate is, considering that I'm long, is I wouldn't like for the price for the price to break that indecisive candle, not too far off for the candle to close. Let's see how this candle closes. I mean, going down to the 1 minute would be pretty extreme for a lot of people, but again, we know where we're at on the bigger scale of things. So here's what I'm going to do is I'm going to now minimize risk. Okay, bring my stop loss right below that candle. Okay, because I don't expect it to break below that. If it breaks below that, I don't really want to be in that trade. I would want it to stop me out, and thus I've literally minimized all my risk on this trade. And I want to kind of slowly move up towards eliminating all risk. Okay, Let's see how this if we go down into the 1 minute candle again, I'll just do some commentary on what's unfolded. So we've got a lot of weakness. We have this very long tailed candlestick, which is suggesting that we might actually get a break of these lows. Okay, we might get a break of these lows. However, I took this trade. I'm happy with the risk. um, it's nothing compared to what we just did. So this is likely to stop me out. Let's see what it's gonna do. And this is the thing, you can never really tell what the market's gonna do. All we can do is act based on probabilities, and have really strict risk management in place, and really good risk to reward in place. Okay, as long as you manage risk and as long as you focus on really good risk to rewards, then it's very unlikely for you to blow accounts. Okay, which is a common thing amongst new traders. And I guess some people have to experience losses to a certain extent, and experience losses, losing trades, in order for them to learn from it. Alright, so we just wicked straight up, and then now we're back down again, indecisive. I want this to go up, obviously, and if it does, I'm going to bring my stop loss up, or I might just close off this trade, because we are weak. Okay, we are very weak. Give me some room to break even. Let's go. Okay, yeah, we're rejecting that level. I might just want to take a small loss, or let's see, 22 minutes into a 30-minute candle. So that 30-minute candle, some rejection along here, drop down to 5 minutes. It's what I like to call a sniper entry. Okay, sniper entry being that, okay, boom, there we go, and I would like to break even. Come on, let's go. Yep, I want to break even. Alright, so that's it. So now worst case scenario is there's no worst case scenario here. Okay, either outcome is great. It'll be great. Okay, so if we just jump back up to the hourly, which is where I initially took that trade. Okay, now again, considering the weakness, I don't expect this trade to I expect it to actually stop me out. I expect this, as I mentioned earlier. Okay, can you see how price just comes down, and we are going to get stopped out. We're going to get stopped out. Let's see. Yeah, we're going to get stopped out on this trade. I'll just take a quick small little profit here, and 3, 2, let me see. Okay, alright, we've got some rejection off of it. Yeah, it's likely to stop me out, but I'll just oh, there we go. Okay, so it stopped me out. Alright, that was fun, and trading can be fun, but it's important that you don't get carried away with it. Okay, so that was an attempt of me trying to get a much more better entry. Okay, and as you saw, we got a really nice entry, and then what I did was minimize risk, and then from minimizing risk, eliminate all risk, to breaking even, and the overall outcome is a good trade, and risk was managed. Okay, you see, as you can see, it's a trade I actually don't want to be in. I don't want to be in a trade that is likely to come. What I mean is essentially, if I was still in this trade, I would be in the minus, and it would have gone and stopped me out, right? So capital preservation is very important. Protecting your capital is very important. There we go, very weak candles. I was expecting this anyways. Had a quick opportunity to jump in. Remember, it's relative to the time frame that I was on. As you saw, I had a really nice 1-to-1 risk to reward. I took that trade in anticipation for price to head even higher, to give me a really decent risk to reward, which obviously hasn't happened. So there we go, really nice trade. There's no such thing as a bad trade. Even if it was to stop me out, it's still a good trade. Even if it was to stop me out, it would have still been a good trade. I followed my rules. I read price action. I made sure I bought off a really nice level. I managed risk. I managed the trade overall effectively. So all in all, it's a really good trade. Okay, there should be no trade should be considered a bad trade. Okay, if you haven't managed your risk, then it's a bad trade. Well, you should have managed risk anyway, regardless of whether you made money or not. Regardless of whether you made money on a trade or not, even if I was to, let's say I increased my risk to, I don't know, 5%, okay, it's breaking the rules, all right? One part of my rules is that I don't risk no more than, 2 to 3%, and I went in with a 5% risk, and then I made a lot of money. Most people think, yeah, you made a whole bunch of money, it's a good trade. It's a bad trade, okay? You don't want to do that. You don't want to take trades like that, okay? It's like a really bad trade, and it's even worse than having a loss, right? Anyways, this trade pretty much played out. If I wasn't recording this, I wouldn't have taken that second entry, but I wanted to show you that even across lower time frames, there's opportunities to get really nice risk to rewards. There was a quick 1-to-1 just along here, risk one, one risk for reward of what I initially risked. That was on the table. It wasn't really, I tend to go for much more higher targets and break even a lot sooner. But this has been fun recording it live to kind of really give you some insight on how I trade the markets. Okay, pure price action, pure candlestick analysis, top-down analysis. Top-down analysis being I worked my way down from a higher time frame, even before price came down to where I just entered on my second entry. I expected price to come down to that level. I'm then expecting price to reject. Where was it that I entered? I think it was on this candle. I'm expecting price to reject this particular area, this zone right here, and then it did move up, giving me the opportunity to break even. But again, I was already expecting some type of a break of the lows. In fact, another nice entry was actually right here, down here, previous support. That would have been a nice level to enter it, but I'm pretty much done for the day. That was a good trade. So I don't know what else to say. I mean, look guys, manage risk, and if you guys want to learn how I'm doing this, okay, then reach out. I am taking on a few clients, so there is an application form here below. Click on that link, fill out the application form. If you're a struggling trader, I would really love to actually come in to your life and actually help you with not just your trading, but because a lot of the I guess the rules and the discipline and the patience required in trading is something that's also applicable to our day-to-day lives, okay? And that's something else that I can also help bring to the table and ultimately help you with your performance, your discipline, your patience, your risk management, all the things that you would find as to why the average trader struggles with trading in the financial markets. It's mainly really one word: psychology. Okay, there's people out there who understand what I'm sharing. They understand buy for support levels, wait for price action, yet they struggle. Why do they struggle? Typically I find that really smart people actually struggle. Okay, I might actually look for another entry. Let's see how this candle closes, right? Let's wait for price action. Anyways, if I do, I'm no longer going to record it. I don't want to lengthen this video any longer than it is already. Any questions, hit me up. If you are struggling with trading, reach out, hit me up, hit that button in the schedule the session with myself real quick, and I'll be more than happy to help you, assist you, and guide you through your journey. And that's it from me, Mamoon Ahmed. Bye for now.